First idea, McKesson, the gigantic drug distributor.
Yeah, so they are, as you say, gigantic. They distribute about a third of the drugs in the U.S. They've recently exited their international businesses because they're lower margin. But I mean, what they mean is that other countries won't put up with the kind of drug prices that the Americans get charged, which is, it's all very strange. I mean, America develops such a big percentage of the world's drugs, and then they pay the highest prices for it. You may remember back in the days when Americans were flooding north to buy cheap Canadian drugs because we have a great deal more pricing power with much more of a single purchaser model. But yeah, so McKesson has done very well. They were the go-to company for the feds for distributing COVID-19 vaccines, and but you'd think, okay, now that that's over, well, that's the end of that. But the demand is not going anywhere, and this divestiture, this refocus on the United States, the market seems to be really liking that. So we've owned McKesson for a while, both for its, well, growth of its price, which I think has even outstripped our expectations, but also the growth of its dividend. And I could see that continuing to ramp up at much greater even than the rate of inflation.
Your next idea, the company actually doesn't sell tractors. It does sell those ride-on mowers and tractor parts, Tractor Supply.
Okay, if my in-laws are watching, their families lived on the same farm for the last 200 years, and their daughter was married off to this, born just around the corner and, you know, comfortable dressed like this. So that I'm recommending Tractor Supply Company, I hope is giving them a...
So you're not a country squire, Brendan.
I am not a country squire, but God in his sense of humor has sent me out to the highways and byways to some vast percentage of our clients are actually farmers all over Ontario. Well, this business has been expanding for a while, and they're really skewed toward the must-have rather than the nice-to-have products. So if you're pet supplies, farm supplies, they're your go-to company in the U.S., and we do feel that there's tremendous ability to expand, add new stores. So it's one that we think has in the retail space, there's not many really exciting retailers out there. So it's a little bit ironic that I'm suggesting TCSO.
Okay. Carlisle Companies, CSL. Why do you like them?
Well, it's a funny one. It's down. It's up a bit this year, although down quite a bit today, of course, since we've put these ideas to you yesterday.
Wow, it's really selling off today. Yeah. Okay, carry on.
So conceptually, we like it because it a lot of the big infrastructure projects. They do roofing, among other things, like high-end, high-tech roofing for commercial buildings.
Okay.
Some residential, and they also make money from creating cables. I actually don't know why they're down today. Since walking over here.
Apparently, the cash flow and the net income missed estimates.
Fair enough. Well, I think it's something of a overreaction. So the nice thing about coming on this show at this time is that's the price you're going to use when you ask me about this stock in 6 months or a year. So we like Carlisle because it is a basic business that we expect will do well despite any economic downturn that's coming going forward.
Okay, a producer, among other things, of building
materials,
products.
particularly roofing, and also cabling for everything from communications and aerospace to medical supplies.
What about the housing market in general? Are you positioning your portfolio to account for a possible housing bust?
Well, if there was going to be a housing bust, take Canada as for example, we would have had one already. And relative to the rest of the world, Canada looks really good, and I don't think we're going to take any fewer people going forward. And I don't think there's going to be less of a demand for international investors, despite whatever barriers we might put up, international investors wanting to have a bolt hole in this part of the world, both in Canada and the United States as well. So I think everyone's very negative on housing, and anything that's directly housing related has come under a lot of pressure, even the Canadian banks. But I think that may be overdone here. because people are still going to need a place to live. So I don't see a bubble bursting. You may not see the spectacular growth that we've experienced over the last while, but there will continue to be demand, and the companies that service one aspect or another of this business should be all right. And I don't actually see lenders taking a massive hit simply due to housing.
Right. Yeah, I guess it's just ingrained in the culture. You got to own your own house. Germany doesn't have it, for example, but some countries do.
Well, and North America, I mean, I don't know how to upgrade this to modern world, but a person's home is their castle. There
Yes.
we go. And that's the mentality in North America for the longest time. Now, we got overdone in the wake of the financial, going into the financial crisis, but I think where we are now is a place where one needs to do the math and make it make sense, because interest rates probably are going up. So for most people, I've been talking about this now on TV for some time, that locking in one's interest rate, I think, makes a great deal of sense, so that one can actually budget what you're going to owe and what you're going to pay going forward. So I do think interest rates will go somewhat higher from here, and people need to, if they're buying a home, and put that into the equation.